The latest brutal Bitcoin drop yesterday liquidated millions. If you were attached or married to your trades and did not have a solid plan, you could have been one of them. I will share with you the dangers of this and share some tricks to help you to stop you from being attached to your trades. This is Seetified, and I'm going to share with you my thoughts on being attached to trades and some tips and tricks. Attachment in our daily lives and our social relationships is a good thing because it helps you bond with people, make friends, and have a good family life. But in trading, attachment is completely inappropriate. When we are attached to our trades, we stop being rational. Our emotions take over, our decisions are impulsive. Furthermore, we don't evaluate and process information about our trade correctly anymore. When you as a trader are attached to a trade, you look for outside confirmation to stay in a losing trade longer and longer and dismiss signs that it's time to get out. But all these factors really interfere with our ability to make objective and rational decisions about the markets, the charts, and our trade. Being emotionally attached to a single trade is very dangerous because it often leads to wrong decisions and disastrous outcomes. But a lot of traders experience trade attachment on a regular basis, and it causes them to lose money, bleed your portfolio, which could have been avoided or at least limited to a minimum. And the difference is one experienced trader is not that the experienced trader doesn't lose trades. He loses all the time, but he knows how to lose correctly and just move on. So warning signs that you're attached to your trade. So our language and thoughts are a very good indicator. So when you say you're hoping for a certain outcome or that price reverses, it's a clear sign that you should not be in trade you're in. So extreme and very emotional words and phrases are usually a sign that you went wrong with your trades. You know, phrases like the markets are nuts. Man, yesterday it's tough out there. The volatility is killing me. Are terms that are used by inexperienced traders, while those who are more experienced remain neutral about the trades. See it as just another trade out there. Learn to stay objective and keep your focus. So our brain is an amazing machine. It can really differentiate between real experiences and imagined experiences. Even more interesting, what we say and believe we see often manifests in our actions. So when you feel really great and confident after a winner and depressed, sad, or frustrated after a losing trade, it shows that you're really too attached to your trade. The outcome of a single trade is absolutely unimportant of the course of a series of trades over your whole entire trading journey. So some tips. So be aware of your thoughts. Right. So for example, a trader has to make sure you have a great analysis, you create a good and thought out trading plan before you enter a trade. And be assured that you are prepared for all eventualities and done your due diligence. Make sure that everything is possible, whether the trade is going to be a winner or loser. And it's not, in a sense, necessary anymore and not your mistake. So it's similar outside of trading. So when you're completing a project, for example, you have to think of all possibilities, right? So what if this doesn't work out or that doesn't? You have to plan for possibilities. And it's okay to have emotions when in a trade. The thing is how much control that you have. But I do not mean to suppress these feelings. Suppressing feeling emotions is not only counterproductive, but should not be a goal of yours. Although you still experience emotions, it's important that you remain in control over your actions and do not give in to impulsive trading decisions. Record your emotions in your trading journal to see the impacts and when they're most likely to happen, and to see which emotions really impact your decisions overall. Be process-oriented. That's a very important thing. Focusing on process-oriented thinking, do your due diligence and be prepared for all eventualities. But when you notice that your emotional state changes, you start breathing fast or start sweating, you just take away from the desk to cool down and relax to avoid impulsive trading mistakes. Also, perhaps listening to some relaxing music and don't expose yourself to other stress, hectic, or other factors during trading decisions can also help you control your state of mind. We know that, crypto is volatile, and watching a portfolio live can also constantly drive your emotions up and is unhealthy for your mental state. A very bad habit that has significantly, impacts on how you can make your trading decisions, such as, waking up in the middle of night, checking your phone to see, oh no, it dropped, and then you start panicking. But when you see that the price is going against you in a winning trade and that your profit and loss is going down, you most likely, want to close your trade too early, although there are no clear exit signals present. But again, focus on your charts. What was your plan that you have already laid out? Always cross-check with a trading plan to build confidence and trust and to avoid impulsive trading decisions. This is what a trading plan is for and why you should stick to it. And trading should not be a main part of your life. Have a balanced life, because negative trading results can also lead to low self-esteem, depression, and a lack of drive overall. Having hobbies and doing sports and having a good family life balance will also help you through bad times easier and puts trading into perspective. People who work in their regular jobs and only trade part-time often find it easier to deal with more of the emotional aspects of trading because they don't depend on it entirely and let it affect their everyday life. One thing that helps is to also really understand the difference, the correlation between Bitcoin dominance, Bitcoin, and altcoins, if you are an altcoin trader, especially. So it keeps you grounded on not being married to coins. It's always important to have that chart up to be sure that, Bitcoin is not the one dominating the play at the moment. If you, when the coast is clear and when Bitcoin stabilizes, there will always be a chance to play altcoins. If you're married to it and you keep holding on to that coin, you will not have the free capital to actually play new trades. And remember that if you got stopped out of your trade, you always have the free capital to choose from hundreds of other coins to enter a trade when the time is right. So that's all I have to share today. I hope this was helpful. Don't forget to subscribe and like this video if you found this helpful. Thank you. Take care.